All right, let's do a little recap, set up a little game plan for tomorrow. So, basically today is Tuesday. It's what is it today? The 20th, April 20th. Tomorrow's going to be the 21st, which is going to be a Wednesday. Okay, the last couple of days, the stock market has, sold off, a lot of stocks that had big run ups the past couple of weeks. They've kind of been pulling back a little bit. I got the Qs pulled up right here, the triple Qs, the NASDAQ 100 ETF. Um, Basically, it looks like we want to slowly roll over here. But before we go and we start thinking that, that we're going to have another 2 months of just downward selling pressure like we did in February and March, I wouldn't jump that far just due to the fact that we're way over the 50-day moving average. Okay. So when we broke out from the beneath the 50-day moving average supply zone here, it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days of straight run up. Okay. So you can't really sit back and think, oh, the market is selling off. Oh, this is a bear market. Nothing's going up anymore. We just had 2.5 weeks of straight run up. Now, if you caught Tesla in the last 2 weeks, if you caught Amazon in the last 2 weeks, if you caught Google in the last 2 weeks, Square in the last 2 weeks, what else had really big run ups? A bunch of tech names. Roku had a big run up, Nvidia had a big run up. There was a ton of stocks that had a big run up. So if you caught any of those moves, you can't really sit and say like, oh, the market's selling off. Okay, so here's where we are though. I think that it's just profit taking, but today we did fall, or yesterday we fell below the 5-day moving average, and today we closed below the 10-day moving average. So this whole blue line here is a 10-day moving average. It's the 10-day supply zone here, and basically closing beneath that, in my personal opinion, I think that we are going to get down here and touch 331. 331 is a 20-day supply. In order for that to happen, what needs to happen is it needs to start taking out today's lows, which is 334.17. After hours right now, we're at 334.85. Anything can happen between now and pre-market. If I look at the futures right now, they were down like 170 points like an hour ago, 2 hours ago, and now they're only down 50 points. So are they creeping back? Maybe. Do we get a nice bounce in a reclaim of this 10-day supply zone here tomorrow and stocks kind of, get stronger going into next week? Maybe that can happen as well. But just to give like a little bit of take, because the last couple of days, stocks go up a little bit and then they go down and then they go down a little bit and then they come back up. That's because if you look here, look at this blue line, look at this green line, look at this blue line. Even if you know nothing about charts, even if you know nothing about supply zones, demands and the moving average lines, linear regression lines, even if you don't know nothing about any of that, if you take a look at these three lines, look how tight that they are next to each other. So if you're looking at a stock, let's say, for example, you're looking at, I'll just use any stock, for example, let's say you're looking at Tesla and you buy into it at, let's say, $720, and then it goes to $725, and then it comes down to $717. And you're like, why isn't it picking a side? Why isn't it going up? Why isn't it going down? It's kind of chopping around. That's because if you look at the Qs, look at this tight range that we're in. Now, if you go back 2 weeks when we broke out above those lines, look at, we're above the 5-day and above the 10-day, and stocks were going up. We're above, we're above, we're above, we're above, we're above, we're above, we're above. The last 3 days, we're kind of stuck in between. We kind of broke down starting 3 days ago off the highs at 342. Then we've been stuck the last couple of days and now breaking down. So do I think that we're going to touch 331? Maybe. I don't follow the SPY as much. I mean, I look at it, but I don't. The Dow, I don't really follow that either. I trade tech and growth. So everything that I trade is going to be tied into the triple Qs. So I don't care what the SPY is doing because the SPY has oil companies in it. The SPY has, I think banks in it. It has big retail, big box retail stores in there. I don't care about those. Yeah, I don't care about those industries because those aren't the stocks that I trade. I trade Amazon, I trade Teslas, I trade Netflix, I trade Nvidia, Roku, A lot of these growth stocks, Apple, I trade all that stuff. Square, yeah, I mix in a few things. I've traded DraftKings, I trade Penn, I trade, a bunch of other stuff that I mix in there along the way, but predominantly I'm trading things that are going to be tied to the triple Qs. So if the triple Qs are going down and you're trying to buy a stock going up, that's really not going to make any sense. If the Qs are going up and you're trying to short the market, well, then that's also not going to work out to be in your favor. So we're still in a bullish market. Until we break below 324, we are bullish. So even if you are going to short something, or even if you are going to buy put contracts to the downside on something because there's value there, it's not going to be forever. You're looking for a quick scalp. You're looking for a day trade. You're looking for an overnight swing trade on something where you have a potential measured move, not just going to hold it for a week because you think it's going down for a week. We're still in a bullish market. I think that this is profit taking. So let's get into some of the stocks that I'm looking at. First one, Facebook. Why am I looking at Facebook? First off, Facebook today broke below the 20-day moving average and the middle Bollinger Band here. It lost the 10 and the 5-day supply zone the last couple of days. Today broke through the 20-day moving average line and tested this linear regression line here. And as you can see, it bounced like to the T, bounced perfectly off this line and closed above the 20-day moving average, but got rejected on the 5. So all of these lines that I have on my charts they're all supply zones. Okay. Stocks trade from supply to supply and demand to demand. So if you believe in that theory that, the stock has to, go through resistance to find new support and then bounce off of support to break through to break through resistance, well, then all of these lines here are going to mean something to you. And I'm not going to get into what all of these lines are or what exactly they all do individually, but just the gist of it, the more open air that I have, like the more space in between each line, the better the potential trade will be. Now, I'm just going to use this for example. If we start down here, look at, you got 1, 2, 3, 4, 5, 6, 7 lines. So let's call these, trees in the forest. You have all of these trees in the forest that the stock would need to get through. And every time it comes to one of these lines, it's going to get bounced off. And then it's going to have to come up again. And then it's going to have to break through. And then it's going to find support. And it's going to break through. And then it's going to find support. I'll take this for example. This line here is a 50-day moving average, the EMA. If you were to break this 50 EMA, well, then you have 10 points to the upside. 10 points to the upside. So for me, if a stock is able to break and there's no trees, right, in the forest here, then I would feel very comfortable putting on a trade. So going to Facebook, what I'm looking for, if the market wants to continue to pull back, okay, we have the linear regression line here at 296. Let's just call it 296.12. Let's just call it 296 even. A breakdown of 296 could get you the first measured potential move to about 289. So 289, I would look to lock in some profits, and then you could expect support at 287 at the 50-day moving average, which is also where it broke out from almost a month ago. So if it does continue to break down, you can look for some support around 287. However, it does need to take out today's lows, which was 296, 297, and it needs to take out 296.12. Let's just call it 296. You take out 296, it confirms to the downside. You have close to 10 points of downside. So that's what I'm watching for on Facebook. Really not watching anything long on Facebook until it breaks 310. Let's look at Nvidia. Nvidia also, if you go here to the beginning of April, the 29th, the 30th, 31st, as soon as it broke above the 10-day moving average here and cleared out the 50-day channel, what did it do? It ran up for 2 weeks here, hit a high of 648.57, all the way from a breakout of 518. So just do the math on that in your head. If you were to take this trade, let's say here on the break of the 5, the 10, and the 50-day moving average, and you got long on March 31st, and you rode this trade all the way to the top, it was 648. You could have essentially made, what is that? 540. You could have made 100 points. There's a 100-point move in about 2 weeks, 3 weeks. Okay, so same story with this. We broke down below the 5-day moving average. We broke down below the 10-day moving average. And now here I got a alert set for 598.40. The stock after hours is at 603, 604. If Nvidia can confirm more downside to 598.40, then you have a measured potential move to 580. Okay, I'm not looking to get long on Nvidia until it breaks 632. Measured potential move would be to 647 and then 648. Microsoft is also another stock that I'm looking at here. Microsoft broke below the 5-day. However, it's sitting on the 10-day here and the linear regression line. If Microsoft breaks 256.50, you have measured potential to 250, from 256 to 250. First measured move is going to be 252. I would look to take profits there, and then look to take profits here off the bounce at about 250. Really not looking to get long on Microsoft until it breaks 261.50. Potential to the upside is 267.92. As you can see, look at here, nothing but air, nothing but air. Down here, nothing but air. Now, let's just say, for example, just to reconfirm this, let's say that Microsoft breaks down below 250. Would I look to short it at 250? No, because you have support here at 247. You also have support at 244. You have support at 242. So you see what I'm getting at here? The more lines in the sand you have, the harder it is to put on trades, the more you're going to just chop yourself up. Stay patient, wait for the move, let the stock confirm. What else did I have? Oh, Roku. Roku here, same thing. What happened? Beginning of April, end of March. As soon as it broke out from the 5, as soon as it broke out from the 10, as soon as it confirmed the 50-day moving average, it ran from about 362 all the way up to 399, 400, which is about a 30-40 point move in all in total. What's happened again just looks just like every other stock in the NASDAQ 100. Going back to 3 days ago, we started to consolidate here, a little bit of distribution channel. All of the supply zones really started tightening up, broke below the 5 and the 10-day moving average, and now we are below here. So what I am looking for here is a break of 346.82. If we can get a break of 346, I'll just call it 346. Our first measured potential move would be about 330, 323. You got room all the way down to 295. With the way that Netflix's earnings went, I don't think they were bad. However, they did lose a lot of subscribers. Their growth doesn't look to be as strong this year going forward as we open up the economy. So Roku's going to fall hand in hand with Netflix. So Roku's earnings, let's see when Roku's earnings are. Roku's earnings. Where is it? Roku's earnings. They're not even listed yet. So whenever Roku announces their earnings, I mean, if it's going to follow the same suit as Netflix, then you have a lot of measured potential room down here. But if you're looking for a quick scalp, you're looking for a quick swing trade, I'm looking for a break of 346.82, 346. If it can do that, there's got a lot of room to the downside. You would set a stop loss at a break above your entry here. So if you get short on this thing, 346, 345, I would set a stop if the position works against you, probably 349, 350, somewhere in that range. Give yourself 3 or 4 points with a potential 10 plus point reward to your risk ratio. What other stock before I hang this up? Square. If you take a look at Square, for example, why I'm not watching Square, even though Square is selling off a little bit and testing these supports, look at all the trees. Look at all the lines in the sand. So you've got today's low of 243. However, you have support at 241, 238, 237. It's just too much. It's too much here. I'm really not interested in going to the downside on Square unless we get a break of 225. We get a break of 225, we have room all the way to 194. I'll look to get long on Square if we get a break of 257 because we have room all the way to 270. You see that? Nothing but air here, nothing but air here. All this traffic in here, I'm looking to stay away from. Tesla, I do currently have calls on Tesla. I'm getting absolutely destroyed on them. I might need to sell out of this position here. However, considering what the market has been doing, Tesla has been holding some pretty key levels here. So Tesla lost the 5-day moving average. However, it is still above the 10, above the 50, above the 20. So for me, there's a sneaky little area here. If Tesla can confirm today's highs of 738.36, it has room to stretch to 750. If it can confirm 750, it's got room to stretch all the way to 760. And obviously, if it takes out 760, the next measured potential move would be 780 and possibly 800. To the downside, I really wouldn't look to short Tesla because you're just going to chop yourself up. Meaning that, yeah, you can take a short on Tesla from 718, 720 and take that into 710, 711, all of those areas. However, just understand that you're going to get chopped up in these areas, okay? From 713, 714, 709, 705, it's just very choppy. If you're looking for a quick scalp, be my guest. If you're looking for a bigger move, the bigger move is not until it breaks below 700. So possibly 698 into 692, all the way down to 682. So really looking for a break below 700 to really go short. Unless you're a 1 minute or a 5 minute scalper, and you can navigate through all of these choppy waters here and you can take a 1 point or 2 point move on them, go ahead. If you trade options, it's really not going to be in your favor to do that, to take a 1, 2, 3 point move on an options contract, because your premium is just going to get eaten up. So save your contract trading for the bigger moves. Amazon's also been getting killed, but if we look at Amazon here, so 33.13, it's got room all the way down to the 20 at 32.72. That's a big move. Amazon also went on a 300 point move. If you got long on Amazon on the breakout was here. The breakout, there's only one breakout. So on Amazon, the breakout was here on March 31st at 31.20 and 31.59. If you got long on this thing at 31.59, it topped out at 34.30. It's a 300 point move. Okay, 300 point move. It's been consolidating here and now slowly starting to break down. Today did break down below the 5-day supply, below the 10-day supply. So you can only guess that if it confirms 33.15, 33.13, and the market looks weak, that it could test 3,300 and it could test 3270. Okay. If the market wants to strengthen back up, you have a very, very sneaky pivot for a day trade at 3387 into 3400. However, the bigger move on Amazon is 3400, 3435 with the measured potential move to 3497, 3500. Okay. So right now, the only real short opportunity you have on Amazon is a break below 33.13. The market and the Qs need to look weak as well, meaning they also need to be pushing lower. You don't want to be shorting Amazon at 33.13 and the Qs are ripping through 350. Okay, that doesn't make any sense. So make sure that the Qs are going down before you get into a short position here on Amazon. However, you do have measured potential all the way down to 3,300 and 32. So that's what I got. That's my recap. I don't think that I missed anything. I might try to get on here and do a pre-market webinar just to see the way things are moving. But the NASDAQ still down, futures still down 55 points. Yeah, so we're just gonna have to see. Netflix, we're gonna have to see what happens with Netflix. Nasty pull that they did after hours after the earnings report. I mean, nasty. Look at that. Nasty, 50 points. It did try to climb its way back up. It is at 501. So 501, well, it topped out at 504. So 504 has room to 509. So, I mean, there's not much room. If you're looking to, get into the market and say, you want Netflix sold off, so you want to buy the dip. You got room from 504 to 509, from 509 to 523. 509 to 523 would be a bigger move, but you need to see some strong price action coming through 510. Like, it needs to be strong. 510, you could possibly take a scalp from 510 to 523, but I'd sell somewhere in the middle. Okay, so if you get in at 510, I'm not looking to hold it all the way till 523. I'm looking to get in on the break of 510, 511, and looking to be selling shares or selling contracts at 513, 514, 515, 516, and so forth. Okay, hope everyone has a good trading day tomorrow, and I will try to do another recap in the morning.